Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis, TGIF. Apologies to you guys, to everybody, all my viewers. I have not made a video the last couple of days. I had to take a little mental health break, but I'm back, okay? FOMC is over. It was a bit of a disappointment. It ended up being a choppy day, but for my Discord members, Uncle talked about how we had the inside candle setup. The levels that Uncle was watching was 604 and 605.5. That was based on the 5 daily moving average and the mother candle's high, which was January 28th's high. Yesterday, we closed just below the mother candle's high. However, the bulls did it. They managed to recapture the 5 daily moving average. Okay, now I've been talking about the 5 daily moving average for years. Okay, this is one of my favorite moving averages. I believe it's a very powerful moving average. I don't know if anybody else uses it, but I love to use the 5 daily moving average. And I often say when the market is really bullish, it spends a lot of its time above the 5 daily moving average. So when I see the price above the 5 daily moving average, I tend to lean bullish. And when the price is below the 5 daily moving average, I tend to lean bearish. Because when we look at in the past, let me just remove all these other lines for now. But when we look at the past and we just look at the 5 daily moving average, you see when the market is bullish, it's above the 5 daily moving average. When the market is bearish, it's below the 5 daily moving average. And what is Uncle Charles' favorite price action setup to trade? My go-to price action setups to trade are the false breakout and the false breakdown setup. One of my core principles of trying to be a sheep style trader is trading unbiasedly, but also trading with the traps. Okay, and we use the 5 daily moving average, right? We go back to the history of it, look at it in the past, like what has happened. You see that every time, well, not every time, but a lot of times, more often than not, when the market recaptures the 5 daily moving average, it tends to be bullish. This was a recapture when we gap below, when we broke it down and we gap back above the 5 daily moving average. That was from mid-January and ended up being very bullish. Here's another situation where we lost the 5 daily moving average and we recaptured it. Okay, now this wasn't a big bounce, but it was about from where it recaptured around 588, 589, going to a high almost to 600. Okay, that was a recapture of the 5 daily moving average. Here's another example of a recapture, a false breakdown. We break down the 5 daily moving average, recaptured the 5 daily moving average. This setup right here was good for about a $8 to $10 move right there. Okay, here's another example of recapturing the 5 daily moving average. Here's a recapture. This was back in November of last year. It led to a beautiful move to the upside. Okay, I'm just showing you guys example why the recapture of the 5 daily moving average is so powerful. Here's another recapture that led to more upside. So the point I'm trying to make is like recaptures of the 5 daily moving average are usually bullish. Not always, but more often than not. Okay, so you combining the 5 daily moving average with the false breakdown setup, you're gonna have a really cool trade setup that you can trade. All right, but the point is, we have ourselves here another recapture of the 5 daily moving average, and it's gapping up a little bit. So the question now is, will history repeat itself? Because I showed you guys a bunch of examples what happened when the price action recaptures the 5 daily moving average. It usually leads to a nice pop to the upside. Now the question is, will that continue? And my answer to that is yes, if a couple of things can happen. All right. Well, first thing I like to say is the top of the chop range for the last couple of days was at 605.5. SPY is above that now. So to stay bullish, that is a level that SPY wants to stay above at the lowest, 605.5. You don't want to see the price fall back below that number. And as long as it's above, my general lean will be bullish, okay? The gap fills around 608, but the level that I'm watching is at 609 and 610.7. More upside is possible if those levels clear. Okay, we clear 609, we clear 610.7, then on to new all-time highs. we go. And the recapture of the 5 daily moving average will once again be a bullish one. Okay. So yeah, as far as being bear, I'm bullish above 605.5 lowest. Okay, I do have a support at 607, but 605.5 lowest I am bullish above, and below it, if we break back below 605.5, I would switch back to bearish with 604, 602, and 600 all back in play. Okay, so all I'm trying to do is follow the levels and setups. Okay, following the price action. So I just want to quickly remind you guys, okay, how Uncle Charters uses the levels. I use it on the 15-minute chart to confirm breakouts, breakdowns, false breakouts, false breakdown. I use the 15-minute chart to confirm them, okay? All these levels that I have are from the daily chart. Okay, so if we look at yesterday's price action, all right? When you look at yesterday's price action, we started off, right? This is the 9:30 candle where the orange line is pointing, the orange arrow, okay? I had a level there at 604. It cleared 604 on the 15-minute chart. So if you go to yesterday's 9:30 candle, you'll see how it opened below 604, closed above 604, and it gave us a nice level-to-level move. It went up to almost 606, okay? I was watching 605.5, but it went to almost to 606 before rejecting and giving us a false breakout. Now, if you go to the yesterday's candle at 10 o'clock, you will see that after rejecting from the 606 level, we broke back below and closed below 604. That would qualify, that setup right there would qualify as a false breakout setup. Now, we're using the 15-minute chart, so it's an intraday setup. Okay, good for a level move, good for a day trade. If you're talking swing trading, you'd have to go to a higher time frame, like 1 hour, 4-hour daily chart in order to have yourself. But when using 15-minute chart, this is good for a day trade move, level-to-level move. Broke down 604, smashed 602, going as low as 600.7. Didn't quite hit my 600 level. But you play it level to level. And then from there, what happened? The market recaptured 602. We broke down 602 and recaptured 602 and gave us a nice level to level move and went back to 604. You see, level to level, one level to the next level, one trap to the next trap, and we are trading with the traps. You want to be on the side of the trap. That means if the bears got trapped, you should be in calls. If the bulls got trapped, you should be in puts. Does that make sense? Now, Uncle always talking about traps, trap this and trap that. How do we know when a breakout or a breakdown is not a trap? Because some people are just sick of trading with all these trappy stuff. They want a legitimate move. Let me show you guys an example, okay? For all my OG viewers, you guys already know what I like to refer to as the back test and go strategy, quote, quote, back test and go. What is the back test and go? If you watch my educational playlist, I have an educational playlist. It'll cover all of that. But let me show you guys the most recent example. So you guys can see here, we broke down 602, right? We recaptured 602 on the 15-minute chart. How do we count it as a recapture? Because it closed back above on the 15-minute chart. Now, how do we know that it's not a fake one? The back test right here. Let me change the color of this arrow. Okay? You guys look at that. Look at this one. This was yesterday's candle around 12:15. The 15-minute chart, yesterday's candle at 12:15. What happened there? After we recaptured 602 at 12:15ish, we back tested 602 and that level turned back into support. This is how, this example right here is how you're able to make sure. How do we know it's not a fake out? You watch for the back test. If we recaptured it and it turns into support, that's a good sign that, hey, the breakout is legit. If the back test holds, call it the back test and go. If it holds and it bounces, that's good. You see buying pressure, you use the volume indicator. You see it hitting that level, and you see maybe the volume bar starting to rise and stuff like that. That's a good sign that there is buying pressure. Okay, that there is buying pressure and that the breakout is legit. Always watch for the back test to confirm breakouts and breakdowns. Does that make sense? And from there, after we turned 602 back into support successfully, we pushed up higher. And right here, we cleared 604, recaptured 604, and it gave us a nice level move to 605.5. And now we go to the daily chart, and we see that we closed and recaptured the 5 daily moving average, the 5 DMA. As long as above the 5 DMA, I am bullish. So I just wanted to show you guys, how do we use the levels? How do we confirm intraday breakouts and breakdowns? How do we trade with the traps? How do we make sure it's not a trap? If you guys need to, rewatch the last 2 to 3 minutes of this video. Well, slow it down if you need to, okay? But I hope you guys understand, all right, how to trade with the traps and how to use Uncle's levels. Because as of right now, based on the example I show you guys on the 5 daily moving average, every time we had a recapture, you know, it led to more upside. So if 609 and 610.7 clears today, get ready for some new all-time highs. I don't recommend going short unless we break back below the 5 daily moving average. All right, starting with 605.5 got to fail. And the 5 daily moving average is around 603.7. So you can reference that number. Make sure you guys have the 5 daily moving average. Turn it on. And whatever is that, you can add it to your 15-minute chart or whatever time frame you use. And if it breaks down below the 5 DMA, it's a very good sign that it's a false breakout setup. False breakout, you want to look to short. Okay, guys, I hope you guys found value in that. Let's move on to Triple Q. We're going to speed it up a little bit, okay? Now, Triple Q did recapture the 5 DMA as well, all right? I have support at 526, 524 fib level, and then the 5 DMA around 522. All those levels must fail to try to give us a dead cat bounce, okay, or to get bearish. Those levels fail, especially the 5 daily moving average. We want to get short on Triple Q, okay? I'm overall bullish above 522. If bulls want to show some follow through, they'll need to clear the next resistance at 528, and that will put 529.5, 531, and 532.5, and the next fib levels all the way up at 534. Okay, we clear 528 and 529.5, then more upside is possible. I'm gonna lean bullish as long as above the 5 daily moving average. I would not get short unless we break it back down. 526, 524, and 522 are the levels that must fail to be bearish. Tesla still kind of look bearish to me, guys. Speaking of the 5 daily moving average, it did manage to close above it yesterday, but not every breakout is the same. You know what I mean? Some breakouts just look very pathetic and weak. And that's kind of the case with Tesla, but we'll see what the price action has in store for us. As of right now, I have support at 400 and the 5 DMA at 398. Both levels must fail, especially if it gets below 398. That would be bearish. 395, I think we can go all the way down to 390 and the low 380s. Okay, this is a volatile stock. I feel a little more comfortable saying stuff like that with this stock because it's a volatile stock. So if we lose 400, 398, get bearish. If we are to bounce, well, 402, 405, and 406.5 must clear. I'd be a lot more bullish above 406.5 because that would be a recapture of a fib level. NVDA, I have it on a 30. Let me get to the daily chart. Yeah, guys, you guys see these side-by-side candles, all right? It looked like it's building an island or something. If you're a bull, you really want to see a gap up or a gap down, some type of island reversal or something. Gonna need a catalyst. We don't have earnings till next month, so NVDA gonna need a catalyst. All right, but the levels are still the same. 124 and 127 are the levels that must clear, and 129 to really put a bottom in. It needs to get above 129 or gap above it is what it really needs to do. And to get bearish, 122, 119, 117, and 115.7 are the support levels. I would be bear bias below. Yeah, I'd be bear bias below 122 and 115.7, guys. All right. IWM got the breakout. That's a very weak, pathetic breakout. That's the problem. Not all breakouts are the same, but we still have to acknowledge it that it is a breakout of this downtrend line. And if it is going to be a false breakout, it needs to break back below 229 and 227 to put 225 in play. Below 227, I would be bearish. But as of right now, to keep the breakout intact, it needs to stay above 227 lowest and show bullish follow through. Stay above 229 and clear 230.5 to put 232, 233.5, and 235 plus all in play. Okay, look to long above 230.5. Here is Apple. Very nice gap up, I guess. Fib level, next fib level is at 247. If this is not a gap in crap, if this is not a gap, and it reported earnings too, if this is not a gap in crap and there's more upside as the plan, then 247 must clear to put 250, 253, 256, and 258 all in play. I wouldn't get bearish unless 245, 242, 240.5, 239, and 237 fail as support. I know that was a lot of levels, but please add them to your charts. Amazon with the pullback yesterday. For more pullback, support at 235 and 233 must fail. Okay, those levels fail as support, guys. You want to look to short with 231, 229.4 or lower incoming. All right, above 237, the bulls have a shot at more upside. They lost its fib level yesterday. They're gonna need to clear 237 tomorrow. Clear 240 to put 241.5 and 243 plus in play. Microsoft looks bearish. Big nasty gap down. It even rejected from this multi-month trend line I have here, guys. It rejected it. More selling pressure. Right now I have a fib level support at 418.7. Okay, it's barely above it right now. If it breaks it down, guys, we're heading down lower. 417, 415, all the way down to 412 would be a possibility. Above 418.7, okay, could be a gap up. But to not be crap, they'll need to clear the next resistance level, 420 and 422 to put 425 or higher in play. I'd be a lot more bullish on Microsoft above 425. And here is Meta. I have support at 691, 689, and 687. Okay, those levels must fail to put 684.3, 683, and 680 all in play. All right, above 687, the bulls have a shot at a bounce, but they'll need to clear resistance 693, 695, and 696.8. Those levels cleared and on to new all-time. We could possibly get back above 700. That's crazy. But yeah, if we clear those levels back above 700, it's a big possibility. And I'm pretty sure I already covered Microsoft. What am I missing here? I'll just go to DXY. All right, so DXY, it's looking like it's bouncing a bit here, guys. It's above the 108 level. Look like it's trying to bounce. It looked like there was like a head and shoulder pattern. I mean, it did show a little bit of follow through, but it bounced since then. It recaptured the neckline. Gotta be careful when DXY is bullish. All right, it's looking like bouncy here. RSI is not overbought, so be very careful. To get bearish, DXY need to drop back below 108. All right, above 108, there's a big chance that DXY can bounce. And remember, this ticker symbol tends to inverse the SPY. Okay, so just something to think about. Coin with a nice bounce, very nice bounce on coin. I have resistant at 302. Very tough sell zone at 302. But if it can clear, like give us that daily chart close above, I think we can get a big pop to 310 or higher. But it's going to need to clear 302. To get bearish, I have 300 and 298 as support. I think if it fails, it can drop down to 293 with a gap fill around 291. This stock is so volatile, so just be very careful. We lose those support levels, it's a good sign we dropping. Where's the 5? The 5's around 290. I wouldn't, yeah, we recaptured that on Wednesday. Show follow through yesterday. So just be careful it doesn't decide to back test it, okay? But definitely, I'm still overall bullish above 290, just based on the 5. And like I said, clearing 302 it could definitely send coin up higher. But if 302 defends again as resistant, trust it only if 300 and 298 fails as support. All right, Doge is just looking ugly, but you know there's always another opportunity eventually, and I need to see 34 cents clear for me to go long again. I'm just playing it level to level, guys. We scalping this thing until it finally decides to stop chopping. But yeah, above 34 cents, which should put us back up to 38 and 40 cents. Okay, I'll play level to level. But if it doesn't clear 34, then no longs for me. There is support at 32 and 30 cents, 32 cents and 30 cents. If we fail, more downside incoming. And here is Bitcoin. It's still looking bullish, guys. Look like this little W pattern. I have my fib level based on this W pattern. Look like it's in the handle part. Maybe it's a cup and handle. Whatever you want to call it. Either way, 104K. 104K is the equilibrium level for me. Above it, Bitcoin has a shot at more upside. Okay, 106, 108K, 110 will all be targets. And below 104,000, 100K would definitely be a target back to the downside. Okay, that's my plan for Bitcoin. And yeah, let's finish this week strong, guys. All right, bye.